So I was researching exactly what happened with Zillow and their house buying business and why they shut it down. And I wanted to share with you some interesting statistics as well as an indication of, hey, what's really going on here and whether or not you should be concerned if you are buying a house or maybe you are an investor looking to buy properties to fix and flip. Then what impact does this have on your business? And so that's what we're going to be discussing here in this video. So let's talk about Zillow Unglued. So here's some additional information that you might find interesting in terms of what happened with Zillow. Or just to give you some context, in quarter three, Zillow bought 9,680 houses and it sold only 3,000 of them after purchasing 3,800 houses in quarter two. And then again, only sold 2,000 of them in that quarter. So, in other words, Zillow was very good at buying houses but and overpaying for them, but cannot sell these properties without losing a lot of money. And its inventory, just to give you context, the inventory of unsold properties ballooned up to $3.8 billion. Think about that, how much inventory that they were holding. Now this is up from 491 million in December. So what ends up, if you look at this, you realize that they just continue to buy and buy and buy, but they were not selling these properties. And so because of that, all of a sudden now on their balance sheet ballooned the amount of inventory that they were holding. And the problem with this is that their model was dependent on them scaling this model even more. So they saw the writing on the wall and said, wow, we have got to buy, for this to be feasible for us, we've got to buy a lot more properties, but we already cannot sell the stuff that we have. That's a problem. And Zillow, from the very beginning, was not making any money. In 2019, it was showing losses for this business. So it wasn't profitable at all from the very, very beginning. In fact, the losses were $312 million. All right. In 2019, in 2020, there was $320 million. And in 2021, there were 708. It's estimated because part of that is the amount that they've lost already. And also the amount that they anticipate losing when they sell all of their inventory. So this is not was not by any stretch of the imagination a moneymaker for them or even had a chance. There was no end in sight to the losses. That's really important to consider. And again, they think about this. All right. They lost money flipping houses in the hottest market that you could flip houses in. I mean, if you're a real estate investor, this is the best time to be in the market because why? Values are hot, inventory short. That means you got a good deal, you can sell it. But guess what? Zillow couldn't sell a house out of their ass. That's what the problem was. And so, what are the consequences now for Zillow? Well, first of all, it had to lay off 25% of their staff. So that's a bad thing for the people that were working for them. And that's a significant amount of people. Now, the issue here, and I'm going to cut into this in just a second, is if they got rid of all their staff for this business, but they still hold inventory, how the heck are they going to get rid of these properties? They don't have anybody, any humans in order to help them with this internally. They also blew through $1.4 billion in buying houses. And again, their principal model for Zillow is not this business. This is a side business that they created that they thought was going to be work like gangbusters. Their principal model is the model of generating leads and giving those leads over to agents, and the agents are paying for those leads. That's their primary business model, not the house buying business model. Zillow inflated house prices because it was overbidding on everything. So it was causing house prices in these large metro areas that they were buying to go up and continue to go up. So they actually hurt the end consumer that was looking to buy a house to live in. So every time Zillow overpaid for a house, the entire neighborhood got a boost. The comparable sales now were increased. So when an appraiser goes in there and tries to then analyze the market, it's going to get higher. And also the Zestimate, I always mispronounce that they use and that shows on their website now was manipulated. Why? Because they bought properties for more than market value. And so the Zestimate takes property sold into consideration. So that means that also increases well. Now their stock is also down 62%. They took a hit yesterday when this happened. However, the stock in general is 62% down from their earlier part of this year. And now this just in is that their stock has now been downgraded. So this thing that they did not only cost them to lose money, but it also now has cost them a lot of money in terms of wealth for the stock and the shareholders. So they're going to be pretty pissed about this. So what is next here? The next thing is that they need to do a fire sale, and they have 7,000 properties. How the heck are they going to get rid of 7,000 properties? That now you're dealing with a market that's softening. So every day that goes by, potentially the price of these properties continues to decrease. But the most important thing is they don't have the staff because they laid off 25% of their people. And they realize that it's too slow and painful of a process to sell these properties to individual homeowners. And so what they're going to try to do is they're going to try to sell these properties to institutional investors. They're going to do a fire sale. They're going to put them in a nice little package with a nice ribbon around it and give it to some Wall Street fund that is buying single family properties like Blackstone or whoever. And they are going to get a pretty good deal. Why? Because Zillow just wants to get out of this business, since they're going to lose a lot of money doing this. So that's a problem. And there was an analysis done, 650 homes owned by Zillow that were listed on the market, and 66% of the homes were listed below what Zillow paid for them. Think about that. 66% of the properties that were listed by Zillow were listed for less money than they actually paid when they acquired those properties. And so the huge mistake is that, in the house business, if you're a real estate investor, real estate flipper, and you make your money when you buy the property. You make your money when you buy. That means that you've got to buy at the right price. Apparently, nobody told them that. They bought at whatever price they needed to buy because maybe they felt that the market was going up, and so they didn't have to worry about that. Who knows? There's a lot of things that I covered in my previous video in terms of the reasons why they also had difficulties. One of the difficulties is there's the labor force. The labor pool right now is low. The ability to get appliances and get materials is also difficult. And so because of that, then whatever they're holding in inventory, it's going to take longer for them to get through the repairs and to put that property in the market, and all that compounded. And again, I think that Zillow thought, well, you know what, we can scale this. Even if we make marginal money or break even, we can still scale this business and make money from the ancillary services, such as title services, mortgage, etc. But the losses that they started to incur just proved to be too much, because at the end of the day, now they have to look at this and say, wow, I have got to buy, in order for this model to work, I've got to buy so many properties, and we're losing money already at a small fraction of the houses that we needed to buy. Because one of the other articles said that they were intending to buy 5,000 properties a month, 60,000 a year, and which is 10 times what they were doing now. So imagine 10 times the losses. They probably said, you know what, it's time for us to get the heck out of this business. Hey, by the way, a good source of information and some of the information and data derived for this particular video came from wolfstreet.com. Wolfstreet.com, I was in favor of just giving credit where credit is due. A lot of other articles I also looked at earlier today, but this is a great source, so check them out. By the way, if you want to see my initial video, go ahead and click on here or there, whichever way it appears. However, if also you are interested in learning how to invest in real estate and make some money, then go ahead and click on the other video that will show up. That will teach you my methodology for doing that. And again, if you found this video helpful, make sure you smash the like button and make a comment and say, Chico, that was good.